very long-lasting. This is momentous. We'll remember this day. We've been talking for the last couple of years when China would really deliver stimulus in style. And today they delivered something for everyone. It was a cocktail of stimulus. Most importantly, they really aggressively targeted the stock market. There's PBOC lending for funders and brokers to buy stocks. They're facilitating stock buybacks from listed companies. They're talking about a stabilization fund. But the point is, it's not just that in isolation. They've got something for the property sector. They've got something to ease mortgage rates. They've got something to ease consumer lending. They're helping M&A and to reignite animal spirits in the business sector. There is monetary easing across several different rates. This is really an incredibly comprehensive package. And it was surprising that it took markets a while to adjust just how big it is. And I guess that's because we've had several years of promises and not following through. And of course, even on this one as well, there will be some details that will be important to iron out the impact. But that's missing the point. This is the first time they've delivered across so many sectors at once, and they've already given some powerful details and some power measures. This is a really big turning point for the China market story.
China markets? What about the Chinese consumer?
That is the ultimate big question of how sustainable this is. Does this change the China narrative? I think it's really important. I'm giving this really bullish spiel here. This does not bring us back to the China story of the mid-2000s. China's not growing at 8% again. It'll be wonderful if it can achieve consistently, above 4% in the years above. It's probably going to miss the 5% target this year. Still, above 4% growth is more than any other developed economy in the world, or at least most developed markets in the world. This is still very good growth. Will the consumer property start spending again aggressively? It'll be a tough one, but they will start spending enough for the interim, and importantly, they're going to start putting money back into the stock market because the government has made clear they will support the stock market. And very importantly, they must make this work, so they will. It is still a state-directed economy, and they have said today they are going to make the stock market going higher, and consumers will listen to that message.
Really quickly, let's talk about the housing market as well. We're talking about mortgage rates getting cut pretty substantially, down to 15% to 25% on that payment ratio. How much of a difference does that make?
It's not going to suddenly be a bull market in the property sector, but it's helping this whole bottoming process, which is a long-term process. It's a stabilization here. I no longer think the property sector is going to be a sufficient drag. It's already lost its importance, its weighting in the markets there. So if we stabilize that sector and we get a boost in investment in other sectors through the M&A mood, if we improve the mood of the consumer, and if we just create animal spirits again, then there is a bullish story here, even though property sector is not suddenly a bull market itself.
Talk about giving it all, including the kitchen sink.
Yeah, that's right. This is the broadest push so far year to date by authorities and what the markets and many economists, analysts have been calling for, and that is broader policy support. You can call it a bazooka or not because we have to see how well this is targeted, but it is a very welcome move. We have stocks on the rise in Hong Kong and in China on these moves that address some real issues. Obviously, this injects a lot of liquidity, these moves by the PBOC and the two other finance officials, including the securities regulator, on a very rare stage today and basically laying out their policy priorities. So stocks are up. They also address some of the shortcomings in the property market. Keep in mind, back in May, authorities really unveiled a support package, but it didn't really filter out. Stocks sold off since May. Stocks have been down about 13% before today since May 20th after that rescue package for housing, which didn't really have a lot of efficacy. So now they're hoping with about 3 months left in the year and still with that growth target of around 5% GDP growth still in the sights, this will help push authorities past that goal of GDP growth of around 5%. What did they do? Well, they cut the policy 7-day reverse repo rate. That is the second time they've done that since July. This also follows the 14-day policy reverse repo rate cut that we saw yesterday. They also cut the RRR, the reserve ratio requirement for banks. That's the requirement that banks essentially have to set aside. So that adds liquidity. Pan Gongsheng, the PBOC governor, essentially saying this will unleash $1 trillion yuan, or 142 billion US dollars in liquidity. He also signaled going forward they could have more RRR cuts, more monetary stimulus if the data suggests it is needed. So again, it might be called a bazooka. It is very welcome in the market right now. It is something that many market participants have been hoping for to boost sentiment, not only, of course, for liquidity, but for the stock market, because as you mentioned, there are measures as well for brokerages and other funds to be able to tap PBOC funds to invest in the stock market. So that's good. And it also addresses some of the mortgage concerns, homeowners who have lost about 18 trillion US dollars in household wealth in this years-long property crisis.
Steve, that bazooka is sending the Hang Seng China Enterprises Index more than 3% as we speak. The thing is, when you take a look at the CSI 300, it's up about 1.5% max. I mean, I'm not sure if there's still trepidation or investors are actually looking for more consumption, for instance, measures to boost consumption in China.
Yeah, I think a good barometer will be coming in the next week or two when the National Day holiday happens here in China. It's a week-long holiday. People have to feel confident to go out and travel, to spend as well. And right now, of course, the property market is still a falling knife that many households do not necessarily want to jump in. They're trying to incentivize it to lower those mortgage rates for new home buyers and also lessen the burden on households for existing mortgage holders. But again, confidence right now is clearly low. Retail sales have been just trending in very low single digits for many months. Corporates are also very reluctant to borrow right now at a time when deflation is having its longest streak in since 1999, 23 straight months of factory gate deflation. So there are some structural issues here that still need to be addressed. But again, these moves right now by monetary officials led by the PBOC Governor Pan Gongshang are very welcome.